Okay, it's recording. That's cool. So we can, I don't know, maybe we do something important. Correlation. No, I didn't saw correlation on the scanner. What we're gonna do is not seeing correlations on the scanner. First, we need to prepare ourselves with the fucking copy. Do you have a copy? You don't want another one? All right. So what you're gonna do is, do you have a trading view open? All right. Do you have a watch list like this? Do you see the watch list? Why aren't you looking at the stream, bro? Look at the fucking watch list here. This is really important because if you miss a fucking second, you don't do the entry properly. Dude, watch list. Watch list. What is the watch list on TradingView, man? What the fuck me, bro? Look, dude. Open this shit. Yes, save as watch list. And now you'll have a watch list there that you can use, right? What? For this, come on, man. Stop playing with this shit. Need to, do you get the fucking tools or not? You don't have the tools. Because if you don't have the tools, then we're done. The tools that you need fucking trading view, you need magic keys, you need MT5, you need access to the scanner, you need to have fucking coffee, you need a smoke, and you need fucking MDMA so you can kick an or crack cocaine or some shit so you can get a bit more fucking high. Because you're too slow, bro. Get the fucking watch list now. The fucking market is about to blow, bro. It's fucking reversing in the bit. Yeah. Do you see the watch list? Okay, open US dollar JPY. Did you open it? Now put it on the 5 minutes. Are you seeing my stream? Are you sure? Do you put? Do you have your charts in United States time, like here, New York? All right. Do you have a toolbar like this? This. Do you have this shit? Pick up a vertical map, 8 o'clock New York time, 8 o'clock here, and 1 a.m. here. Okay, there you go. And then what you're gonna do is take the lowest with array, take the high. This is the Asian range. This is the Asian low. This is the Asian high. I told man, hey, dude. This is the Asian high. You see? Asian low and Asian high. They're mapped. Now, what we're waiting? We're waiting for the Asian low, in this case, to be taken. It was taken. Now, what we're going to do? We're going to expect that the range flips and takes the top. We're on the 5 minute chart. We're going to drop to 1 minute. See what currently exists in market structure internally. But first, we're going to see the market structure on a higher level. So we got a lower high, higher low, lower high, higher low, and a higher high afterwards. So now it made a lower low here. It's still not plotted, but this is a lower low. And the idea is that if this is a higher high, this is a lower low, all this bullshit that we see here, all this range that we see here, is it's uh, fuck man, accumulation. This is accumulation, okay? So what happens here? This is accumulating, market is ranged, then there's a spike, takes the top of the accumulation area, which is kind of this fucking top here. So there was a market structure shift, right? So there was a market structure shift here, and there was another market structure shift from this area. We would like to see this shit happening, and this is when we know that we're in a good condition to really start plotting it upsizing. Nevertheless, we currently have a massive fucking FPG on the 5 minute here that will be interesting to see. So in a burst, we just bounce in, see what is going on, and see if there's a displacement candle. And there is a displacement candle already. So there we go. So what we have mapped Asian highs, Asian lows. We see that Asian low is taken, and we're looking for the market structure in the lower time frame to give us an indicator that it's going to start spinning up. How the fuck do we do that? We want to see first this area being taken, and we already seen this area being taken. So there's already a market structure shift. So if we plot it like this area is taken, and we need to see this area being sustained. Does it make sense? Are you seeing the chart? Are you seeing my screen? All right, man. So this is the thing, right? So there's a market structure shift that just took this area. This area took a dip into the FVG that was above. And now let's see what the market will do. If this is actually an interesting bullish pattern, we'll be waiting for it to go higher, then come back to an FVG to go even higher. And the area that we will enter would be this, and what we will be targeting will be the top of the fucking range with a massive fucking 10 fucking R fucking boom, like this. And really tight stop loss. It's a 6 out of 10, 10 R. But since we're doing a small fucking introduction to this logic of, I think this is what you learned yesterday, right? Yeah. So you see, as you can see, we have the three candle formation that shows displacement right now. So let's just take this shit out of here. I didn't miss it for too much. It was pretty close by. So what we're going to do now is actually put it on the 3 minute to pick up the FVG that was created. This is the FVG that was created. Because you will see on the 1 minute, you have different FVG steps. One here, you don't. How do you enter? You enter from the M3 because it consolidates the three FVGs that you, with the three candles patterns of displacement that you will see on M1. The same here on M5. Yeah. Mainly, yeah, unless, man, it's really razor sharp tight. I recommend that, yeah, man. So, where are we? US dollar, JPY, right? Do we have anything on the scanner? No, nothing on the scanner. Let's see. Okay, let's see. So, for me, what I start doing firstly is pairs that will interest me before 3 a.m. New York time. 3 a.m. is this area, is this hour. You see? 3 a.m. When the price reaches here, London session will open. So for me, the price can still come down, break this low here, the real low, and then starts displacing up. And let's see if that will be the intention of the price here. At this point in time, I'm not interested. I'm interested in knowing if the lower or the high of Asia was taken. And if it was taken, what I do is a check mark on the watch list here. This pair interests me. And I move to the next. Do we have an Asian break here? No, I don't care. Next. Do we have an Asian break? No, I don't care. Next. Do we have an Asian break on this one? No. And you see this rectangle, square, is my Asian range, is the Asian range. Okay? Let me just tune this actually a bit more. Sundays and shit. I'd like to show London Eye, show US range bits. Okay, fuck it. Yeah, very fast, as you can see. So I don't lose time with stupid shit. So you see, I have it's an indicator that I created to map Asian high and Asian low. So yeah, simple thing. And here we still don't have anything taken out. Nothing here either. Oh ho! GBP US dollar. Look at that, motherfucker. All right, so we just do a tiny map here. Right, so we have at the moment two pairs that are considered within our strategy. And this is just the preparation, right? So we prepare and understand what pairs will trigger our interest if they actually break the high and the low. Yeah, let me just see. What? What do you mean? No, that's weird. Don't worry, I'm recording. But like, yeah, so make the highs and the lows, and the highs. And what's the problem now? The streaming is dead or some shit or what? Oh, but you're in the session here, man. Share your screen, the entire screen. Share the screen. Share the shit. Is it appearing? Should be there. So let's see now the shit. And we got Euro GPY, and you said that GBP UAD also had it. Let's see. Shit. All right, so this is GBP AUD. I don't see anything broken. This is another one. No, this is what? What? Which one? Man, specify, define things correctly so I don't lose time with shit. Which one? What previous one, man? Fuck, okay, I continue. I continue. All right, so we continue here. There's nothing here. There's nothing here. This one is also taken. This goes here. This goes here. Bang. So we got another one here. So this is European Euro US dollar. Really cool, right? So let's see. Bang. So Euro US dollar goes up there. And then the bottom here. So we have the ranges pretty much set up. So then if we need to target the fast fucking entry, we just are very fast. And where are we going to target the entries from? Then we have them mapped here. What will be our important pairs that we will going to use? Then we're going to use this information in correlation with the scanner. And then we're going to wait for these pairs to appear on the scanner with an 80 to 90% probability. And then we will fucking enter. So this is what I do. All right. Euro, Swiss franc. There we go. Another one that is also taken. This seems to have a continuation. And let's map the fucker here. And we got Euro AUD. We don't have it. CH, we do have a tiny little motherfucker there. This is on the 5-minute chart, by the way. So we just map the fuckers like that, and like that, and CAD GPY. We map the previous guy, not taken yet. AUD CHF, it's taken. Let's put it on the 1 minute here. Yeah, it's taken. Can't you see? Because I can't see shit. On the 5 minutes, do you see anything taken? Now you do, because I put the line, but if you did, I didn't put the line, if it's like this, how the fuck do you see? Yeah, exactly. This is why I put it on the one, so I can actually fucking do the trimming on the line here, and then map things correctly. Do. All right, so we got this shit done too. So this is also interesting. AUD CHF, CAD CHF looks pretty brutal to me. Massive fucking range, Asian range. So there's two types of Asian range. There is the range that does continuation, that the range does a continuation and continues where it started. And then there is the Asian reversal, which is exactly what I'm telling you. The reversal normally takes place at between 3 a.m. and 4 a.m. And after the reversal pattern that you will notice is a swing on liquidity on the low of the Asian range, on the top of the Asian range, and then the market just reverses. And this is because on the higher time frame, what we're picking up is a pullback. On the lower time frame, it looks like, oh, it's the rain. No, it's the fucking pullback on the higher time frame that you're picking up. So in here, we don't need this shit. But this is the idea. This is the strategy. And this is a very interesting one. So as you can see, we have 1, 2, 3, 4, 5, 6, 7 ones mapped, and we're now waiting. So I reckon that this will be the first thing to look at. Yeah, yeah, of course, man. Totally, do, right? Yeah. It's on the course. The consolidation market structure for the Asian range. You see this shit? This is a consolidated range. It's consolidated. There's no trend. It's consolidating. There's a top here, there's a bottom here. The market goes and it's like a range, right? So this is considered accumulation. After accumulation, there's three market cycles that you should know: accumulation, manipulation, and distribution. Asia normally does accumulation, accumulates price, accumulates, right? In London, there is a counter move towards distribution. So this is why there is manipulation. Meaning, in London, so in Asian consolidates, in London, it gives you the wrong bias. It goes to the wrong side. And in New York, the price distributes to the correct side. And if you can imagine this as uh, a consolidation range, a pullback, and then a breakout, you know, after the pullback. A breakout, Yeah, like let's imagine a lower high being created, and this lower high is actually the manipulation in London called the Judas swing, right? So, and then in New York, what the price normally does, like 80% of the time, is enters the pullback from London, the, and then with the volatility of the news, the price is shot and distributed towards, in this case, a lower low, breaking, doing a breakout. So this is why there's accumulation. Always in Asia, there's the price is ridiculously stale. It's accumulation session. London is a manipulation. So if we know where the price is going to go in New York, we will know that in London there is 80% probability that the price will do exactly the opposite because this is really important shit. Now we need to wait and validate what we currently have here and prepare then magic keys, MT5 and everything. These ones that you currently have open, we're going to see market structure on all of them, see which one offers the best probability setup based on their market structure, and then we just actually set up MT5 with magic keys with these guys that we already mapped and wait for the signal to appear. That's it. We're going to do only one trade and we're going to go for 1 to 3 hours. Not below, not above. Because what we're looking at is the Asian range is breaking the low. We're looking for the range to go to the high of the whole range, to take the top of that range. That's what we're going to look for, right? But first, I'm going to have a smoky. And New Zealand dollar, US dollar, we don't have any. But it's there. Let's see what currently it is. So it doesn't have a range, so I'm not interested in the shit. No, GBP, US dollar. Oh man, look at this shit here. This is so good. This is really, really good. But it's already done. The entrance, look at that fucking entrance here, man. Shit. Right there. Oh, fuck. This is already done. Oh, man. 50% of the gap? No, I just need for the gap to be taken a bit. No, what you want to do is for it not to reach 50% of the gap. In this case, if it's a bearish, which is what we are expecting because the top of the Asian high was taken, we want to see a displacement, FEG, which is this one. And then we want to see is actually the price coming back to that FEG, just a tiny spike like this. And this is the entry. So you can really tap the entry like this and have a 1 to 12. Can't you see, man? Here, like there. More specific than this, you can't be. You can't fucking be. Yes. So 1 pip on the value gap, man. It's 1 pip in the value gap. It's really, yeah. It's not even a pip. Oh, look, it's not even a pip. It's half a pip, man. It's really half a pip. Look, You see? No, you don't want 50%. You don't want the price. If it's a bearish, you want the price to always stay below the 50% of the fair value gap. Like this, maximum the 50%. If you see the fucking value taking this like this, I would consider the position invalid directly. I would not enter on this shit. Yes, I would not enter a bearish like this because the price, it's not, the fair value gap is not being respected by the price, meaning that what you have as an idea is flawed. You invalidate that idea directly by just looking at the fair value gap and price. It's crazy. Dude, if you just come here and you put the fucking limit order right on the beginning of the fair value gap, intending it to go lower, look at what happens. You have a fucking one fucking 50 fucking 5. Look at this. It's half a pip fucking entry point. It's crazy. You tell me how the fuck a person can think of a limit order with half a pip fucking entry spread. It's crazy. If you find someone that does it better, let me know. Because I don't. I really don't. It's brutal. Fuck, crazy. Because if you don't map the entry properly, you're fucked. If you don't know how to enter, you're doomed, man. You cannot trade, man. So look at the screen. Look at what the price did. Look, if we scoped an entry here, look at this shit. What would happen? The entrance is completely, and what I was telling you about, I just back in the shots. I just came from the smoky land. So what we do is pick up 2 pips from here. So, 2 pips is here. Or we can actually do it properly. 2 pips here. Two, 1 pip, 2 pips. And what we do is we just map one thing here so we can map the pips, and we can just really fuck. We got a 128, and if the price goes above, we're not interested, man. But sometimes in forex, and I tell you this again, the candle that creates the fucking FVG, put the fucking stop loss above, because sometimes you're gonna see a spike. The market in forex, dude, it's the worst fucking market ever. But we learn from this shit, right? The worst kinds of ways. So let's scope that. Okay, we have mapped the fucking thing. We have the Asian top here, and now we're gonna use protractor. No, fuck. How is it called? A standard deviation tool to map the stop loss to the entry point. And we have the R's that we currently are. We're already at 4R. If we enter there. Yes, so fast. Yes, yes, yes. That's it. That's it. That's it. That's it. What we're waiting for is this line, 3 a.m. line, right here. And now what we're going to think is, okay, we're at 4R. What are we going to do? The price is expected to hit this fucking low. We're at 4.5R. I don't know if you're seeing this shit in real time, but I hope you are. We are currently with a higher high on a higher time frame. This is a higher low. What does this mean? That we bought the price in premium, and we're waiting for it to reach discount, which is this area. This is discount area, right? So discount, premium, and equilibrium. The price, it's the middle of the range. Where is the price going? You put it to 1 hour, there's a fucking fair value gap here, really accentuated that the price is in. If the price is going to really go lower, you want to see the fucking FVG not being respected and break lower. If this doesn't happen, close the position right now. And right now it's at 5.5R. And this is how you know. Yeah, I don't know, whatever. Fuck, see the fucking FVG shaded 1 hour, 3 hour, 4 hours. See what the fuck happens. Because if you don't understand this part, you're fucked. You will never hold your fucking positions in the game. This is what I meant. The price is reversing. And let's see, did it reverse or is it actually doing a tiny little pullback here on 1 minute? We just now dropped from 1 minute. We mapped the fair value gap on the 1 hour chart, which is this motherfucker here. And we want to see this price being taken. We want to see the fair value gap not being respected so we can progress with the position lower. If the fucking fair value gap starts creating higher highs and higher lows within internal market structure on the M1 level, which is this top being taken, then we have to consider that the price is reversing back. The last pullback was here, and then we have two options. But we are currently at 5.5R. Actually, right now the price is at 4.5R. Now imagine you have a 4.5 fucking R position. Crazy. It's just like we sit down in 20 minutes, we got a 4 fucking hour and a half. What? Crazy. How the fuck did we do this, right? Now think about what we did, right? Now in here, what we're gonna look is for the price to actually maintain the structure that we want. Right? So fuck, let's put it that way. And I would not want to see, I want to see the price respecting the FVG, even on a 1 minute area, which is this one guy here, and not passing this fucking top and completely collapsing now. I want to see the price now fucking collapsing and breaking the low, and this will give me a great indication that we will be really cool there. If this is not the case, let's analyze why the price would go higher, right? Okay, look, we have a higher high on the, let's put it on the 5 minutes. We have a higher, lower low. This is not correct. This is a lower high because the price goes right. Exactly. This is a lower high. So this is a higher high, higher low. This is not a higher high because it is. Maybe it is. No, it's not because it didn't pass this level. But okay, it's almost there. And then what did we? From 1 hour. 15 minutes. It's a lower, higher low, higher high, higher low, lower high. Correct. For me, it's correct. And then it created a higher high. And if it continues up, what do we expect? We want to see the range that was just created, this range, half of the range to be taken like this. If it's continuation bullish, we need to see a higher low being created and then a higher high. Where is the price to be expected to reverse? On the FVG on the 15 minute that we just mapped. On the lower time frame, we want to see this shit achieving that. And right now, I would be expecting exactly that to happen. So, yeah, man, the amount of shit on the shelf, wow, we just clean this stuff. Christ. All right. So, did you understand? This area here is really critical. If it breaks above this area, this FVG here, it's what it's doing is actually scoping a reversal towards what we thought that the market is doing on a higher time frame, which is creating then a higher high. So the market entry really well to create this dip, right? Until exactly the FVG on the M50. Completely repriced the F. But there is no doubt here, man. There is no doubt. Where is the price going? The price is going from external liquidity, which is outside of the range, to internal liquidity inside of the range to go again outside of the range. Always the price moves. External liquidity to internal liquidity to external liquidity to internal liquidity to external liquidity to internal liquidity to external liquidity. This is how this shit does it. All the markets move like that. Right now, what do we have? We have a possibility that the market is reversing because we have unless there's now a bull fucking candle that completely takes this high, this high, this high, this high, and then we will be looking for a continuation upwards. So at this point in time, I would say that this would be a really interesting entry point if that would be the case. So let's put this on the M1. Yeah, because we took the bearish until 5R, and now what we saw on the higher time frame, mid time frame, is that we currently have the market doing a possible reversal, so we can take the actual remaining high off. So it's not going to take the whole Asian range if that would be the case, right? On the M15, you just see a bit of the FVG, but if you put it on the hour, you really see that I'll even map. This is really important because if you don't change a bit on the 1 hour FVG, you see I have different templates for different FVG types of hours. Because then when I move from 1 hour to the 15 minutes, I want to know where is this FVG mapped from? And it's mapped from 1 hour. And this for me is a POI, point of interest, that the price will use to reverse to another level. And this is how I see shit around. So the price for me, if it doesn't break this low, right now it's going to continue and break that shit up there, and that is around 38 pips. Knowing GBP has an average on a daily move of around 80 pips per day. Let's see what will happen. It was a pullback. We're all had. Look at that. Look at that. Look at that. We're still in the game. So this is the kind of thought that you need to do very fast to understand what is the market really trying to do. And if any of these factors confirm that the market is reversing without delivering you a pullback towards the bias that you currently initially have scoped within the initial of your position, then fucking exit the position and look at a different chart. At the moment, we're looking great. The FVG was completely broken here. As you can see, this tiny FVG of 1 minute, not respected. It was not respected, so fuck that. Let's see on the 3 minute what we have. We have the price. Tell me. What? How do I do that? I don't know how to do that. So let's see. So this is the correlation now, but you will see it on the full version of the video. This is 4K. I think recording still. Let's see. Yeah, for 43 minutes. All right. So if this FVG here is not respected now, if we see price not respecting and trying to take this fucking top here, then the pullback, yeah, exactly. Then the pullback might not be in effect because it created a support level here. And what we will be keen on seeing is this one being taken and then this one being taken. And right now, what the price is doing is having this is a CV and this is BC, which is the buy side imbalance. So what happens is that you create an FEG here. The FEG is this is always how the price moves. The FEG is created to support the price move up. The price goes up, breaks this top, then comes down and rips the shit out of it. So this will be a propulsion launch, like a rocket launch. If I were to compare this with a rocket station, so I would be waiting for the price to break this top, probably reaching to this top of this tiny little imbalance here, probably the 15-minute or second nap, coming back to the FVG. For it to go up, you want to see the 50% of the FVG being respected. So the price, if you put the price here, like this, entry 2 pips below, target the top of the fucking price, which is this shit here. So 1 to 7, like that. You see? Top, top, bang, bang, and from here, pending order, we're waiting for the price to come back to the FEG level and do that, right? And let's see what happens. We just put this a bit on the side. We don't do like this is better. We can start, and it's like this. We really are into price action like major style. Then we worry about all this bullshit. At the moment, we have 10 minutes for the price to actually deliver pretty much what is expected, which in this case, what we'll be expecting is the price to come down into the lower part of the actual range. Yeah, let's see. Bang, 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 bang. Yeah, it's the bullish trade. You're right. So yeah, we will be expecting it to go up. Exactly. No. So I would say that we would exit this position around here right now, which is a 1 to 3, because it was invalidated. If this internal market structure shows an invalidation of this, we will exit now, and we will exit in a good term. 1 to 3 is really fucking decent. We close the position, look at the possibility of entry at 3 o'clock, at 3 a.m., which is right here on this red line here. Um, Silver bullet London session. And what happens here is this is where the fucking price is going to completely spike. We need to also be aware if there are any news at 9 a.m. today, and which are the news that currently might appear. So Forex Factory really fast before shit hits the fan on our side and we're not aware. So today's Tuesday, 8 a.m. We had already GBP news, and at 11 a.m. we have the German economic sentiment report, and then we have CPI on CAD and US dollar. Like, so fuck, we don't need to see. Shit, I think I just killed the stream on Discord. 8:30 is gone now. Wake the fuck up, bro. Okay, so Discord. Yeah, it's really 5 hours. I'm already in the beach with money fucking sneakers that cost me $500, man. It's okay. Fuck that shit. Yeah, exactly. So that's the scenario. How are you seeing it until now? Do you have any doubts or any fucking questions? Are you sure? Yeah. So this is how I approach this shit. Like hardcore style. Boom. Every day. The same shit. Look at the price. Look at what the price did. Look at the price directly into the FEG, and now we will see if it respects the FEG or not. Look, is it respecting the 50%? No, it's already break complete the fucking FEG, and let's see. There's gonna be you see the wick that I was telling you about on Forex. It's this. What is this shit? What is this? What is this? Look at the wick. It's really to take people out. Look at that. Look at that. I don't know if it's going to go down until I see this red line, which is the market structure of the previous low being taken. For me, this is still a bull trend on the internal market structure. And only until it reaches this part is a market structure shift. No, market structure shift is when it breaks this stuff. It breaks the shift of the existing downtrend that we have. Higher high, lower low, higher low, lower low, higher low, lower low. If it breaks this top, then it will be a higher high, higher low, and then it continues doing the full bull range. But this right here, I don't like it one single bit. This looks like a complete fucking reversal on the bullish trend. Let's see what it does. We don't invent things. So we currently also have our initial range. Let's put it properly. So we have the possibility to enter here and another possibility to enter there. This is our initial idea, and this is the actual range that we mapped afterwards. afterwards. Look at where the price came from for half of the FVG. It's so random, the price, right? It's really random. You cannot predict nothing. Yeah, it's really like difficult as fuck. The fuck? Yeah, yeah. Now look at this shit. The price massive wick on the top, massive wick on the bottom. Where the price goes? I have no fucking clue. What kind of trend are we? We're in a bearish trend. In a bearish trend. This is a pullback of a bearish trend. Okay. How do we know that it's still bearish? Because the trend is still bearish until it takes this top. After it takes this shit, for me, the price is not bearish anymore. Until now, the price is still bearish. So I'm still maintaining the position that we initially opened back here open. When you see, because this is the order flow. The order flow, you don't see it on Forex because it's decentralized and you cannot fingerprint price. But if you see it on the order flow, you'll see it exactly like this. And what you will see, FEGs, you will see the tops being respected. When they start being respected, the order flow changes, meaning that there's a market structure shift somewhere, and the price trend changes. And this is very important to understand. One interesting way of seeing it is I can show you like here. Order flow from here to here. FEG, respected, not touched. FEG, not touched. Order flow, bullish, completely bullish. Another one, bullish, bullish, more fucking bullish. FEGs, where are the FEGs? And don't consider this area here, this range here. Consider just the bull pattern. And if you see, what it's doing is leaving FEGs behind that are not touched. When this happens, the order flow is bullish. This is a really fast way for you to understand what is the market doing, where's the trend of the market in the potential that you are. Look at the fucking FEGs. Yeah. And we're about to reverse, man, I think. As you can see, I mean, if we were to map this properly, I would say that, you know, the candle here, the wick, stop loss would be really good to have it here. Because these spikes are the killer spikes from hell that was going to fuck people up with tiny stop losses. And we're already with a pretty decent tight stop loss. We're with 5 pip fucking stop loss, man. Pretty tight. But yeah, it's important to give it some space. So I reckon that it will be interesting to have it. If the price starts going up, I will put it around here, something like that. And right now, it's 3 o'clock. Look at what the price is going to do. This is the very interesting part. Yeah. At the same time, we got a minute and a half until the price really blows up. You look at here, US dollar JPY. You see, first here, look, alert. We got a market's higher high and higher low on the M1, which just happened, and we just see it actually being created. So this shit is really fucking beautiful to see. And if you can really go into depths of look, market structure shift. Look, on M1, market is coming down, so I can actually drop the fucking top. Let's see. Market structure shift on M1. Why is it saying market structure shift? Because the previous candle was taken or some shit like that, I think. So at this point in time, put it like this. Up, up. So with this, we have market structure. Does it align with our idea of how we see the price on the higher time frame? No. If the price comes lower, it cannot take to go higher than it cannot take this area here because the price is expected to continue both. So this is higher high, higher low, higher high, whatever, higher high. Now it does a higher low and goes in theory back up. And unless you figure out that in the 4-hour chart, which is this, we're in a reversal, which doesn't look like it, does it? Oh, look at this. This is 4-hour. Does it look like a reversal to you? Price came to the FVG in 4 hours, and now has the possibility to bounce up. So let's go back into our 1 hour. There we go. 1 minute. See what's going on. Oh, look, the price is coming down. So weird. I was not expecting that. No. So let's put it shit here. And this, I think, is also interesting. And now what we want to see is what you already know. Price comes here, creates a pullback, and flushes the fucking target here. Right? No, this is not will be cool. This is the scenario. So let's see. What we have more as interest? AUD, CHF, Australian dollar, CHF. So we now leave the market doing its thing, and that's pretty much fucking it. Why don't I have market structure, indicators, advice, back, boom? We want to see market structure. So what happened here? This one completely failed and invalidated the situation here that we have. So it reached half of the actual Asian range, as you can see, and it started moving up. So I'm going to remove this. CAD the same. Actually, CAD looks amazing. If you put it on the 3 minute, maybe you'll pick up the FEG much better. Exactly. And what I mean with this is this entry point. And look at how the fuck you enter on this motherfucker here. Boom. There you go. There you go. Another one right here. Boom. Looking here. Bang. 3 pips above this shit. Targeting what? We're targeting the low of fucking range. Like 1 to 14. Next, Euro CHF. Look at what happened to the Euro CHF. Just a great example of what happened and what I currently use as the strategy that I'm showing you. So we took the top of the Asian range. Look at what the price did. Look at where the fuck we are. So just this position, and look at the entry pattern. This is the most important shit that I think that you will see happening and happening time and time again. FEG again, 50% of the FEG. A tiny little spike enters the FEG. It goes completely fucking down to the fucking core. Look at that shit. If you do that, put the fucking thing here and pull it down. Right now, it's 26R. The total move is 35R. If you put the top of the stop loss on top of the candle, this candle of the FEG, it's 20R. Very nice. You showed me someone doing the fucking 20R move with you, and yeah, we'll talk about it. Like, look at what I mean. This is what I mean with the spike, because sometimes, look, FEG, same shit. It took the top, FEG, but this case, it took a bit above the FEG because the market is a bitch on Forex. This is what I was referring for you to be careful with. So you put it here, and then the advice is really like, in this case, if you would put here, you'll be tapped out. What stream is that? What do you mean? But I'm streaming now. Oh, share the screen. Oh, yeah, it's weird, isn't it? Share. Right. Is it better? All right, so the same applies for a bullish position. We were just seeing bearish positions, but we're going to scope a bullish position. So the lower of the Asian range was taken, and now we're going to look for a bullish position. How do we look? We look at the FEG that was created. Again, same logic. FEG, the top of the fucking thing, and the lower of the candle, reversed. So this is the entry point. Entry on the FEG. The candle is here. Yeah. This is how the price moves. It's not 1 pip, it's a bit. It can be sometimes a pip indeed. Yeah, it can be a pip. You mean this tiny entry here? because it's the signal for the market that when there is the theory behind it is that there is an algorithm that maintains the structure of market, and each time that the market structure shifts, it enters the FVG, just taps on that FVG to then comes lower, to come lower, and this is why. But it's a theory because no one knows. But the pattern is there. And if you pick up the pattern, there is no way that you can say that it doesn't exist because you see it time and time and time, fucking time again. And because of that, if you use that fucking pattern that you just learned to take advantage of it, this is would be one of the ways that you can take advantage of it. So GBP US dollar wrapped itself into the M15 fucking FEG, started a pullback. Now it created a really interesting break of structure on a 1 minute and 3 minutes in the lower time frame. We have three displacement candles, which on an M3 it's just one. But if you want to enter from here, you would have to choose probably this one here. I would think it's a more indicated one. This is an FEG with another FEG. So this is a CV and this is a BC, buy side imbalance. There's a buy side imbalance. You actually use it like this, and then what you do is you target the fucking price, and it's a 4 fucking enough. And there we go. If the price reaches here, and if you're waiting for a limit order, which I normally don't do, but I should be doing actually. But I'm tired of sometimes I put the actual like we did before here FEG. First you map First you map the FEG. Then you tag the FEG with the market that you actually did. Then you open the fucking price right here, limit order on top of the FEG. I recommend actually a pip above the FEG and below the candle. Target, top of the range, 4 hour. If if the price comes down. So the ideology behind this is the price taps into this below 50%. If it breaks this top, I mean, position is due. But if you're scalping, this is important information that everyone should know. If you're scalping and you don't know this shit, don't scalp. You're gambling. It's fun. So that's the scenario. So the price is gonna go completely fucking rocket size from here. We took the previous at 1 to 3, and also what the price could be doing. And I see this time and time again. You see the initial FEG that we used? Yes, the 3 minute FEG, right? A lot of times the price creates a pullback and trap traders like this. It goes back where it started, takes this top FEG below the 50%, or takes the whole FEG, and then comes back down. Yeah, yeah. But this will be one possible solution for this scenario. And then after 3 a.m., what you see, or 3 a.m. New York time, what you see in kind of displacement is this kind of structure, massive fucking candles being formed, brutal volatility, and this is exactly what we need. We don't need to wait for shit to happen. And at this point in time, if we were in this position, which we are not, we have some interesting range. Yeah, but and because we're waiting for the pending position and support. Different story from market open. If it's a market open position, and there's a range here, I would completely just do this and put the stop loss here and target the top, which is kind of give me the same with the R pretty much. In this case, it even gives me more, a 6R. And this is why sometimes I don't wait for pending orders. You see? And I would be already with to taken, and there is already a great probability that it continues going up based on the candle structure, and this is why. So you have two options: pending order entry point and market order directly from here. If for the spot thing, if you put pending order here, what happens? Did the market reach there to trigger your pending order? No, did it? Do you understand what I'm saying? Or are you just saying, yeah, 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 yeah? You're looking, okay. Did the market came back? The market did not come back. So this order is invalid. It didn't trigger. You're looking at the price to come back and you don't have a trade. You're not in a trade. You didn't do shit about the trade, right? So to bypass that problem, what I do is instead of a pending order, do a market order directly when there is a propulsion range like this. So I'll enter here, stop loss behind the last candle, and the targeting the top, which gives me a 600. Well, do you see this? What do you see here? Accumulation. Yeah. So you see a bullish momentum and then a bearish momentum, a retesting on the bearish. The bearish cannot retest lower than this, and then there is a massive engulfing candle that takes them both. This normally is how the price reaches a pullback. Every time it's like this, with three candles like this. This is all over the fucking place. If you see this pattern, it's everywhere. Let me see on a bullish way. But the idea is that, I mean, if you see it on the 3 minute, it's like this, but on for example here, it's here. Look at this shit. You got it, three candles, and it's just completely flies. Let me see more examples. Well, you're seeing here, like we put it on 5 minutes, you'll see the same. And this is the thing. And the same is applicable to the bearish side. Like this. There's a bit of consolidation, retesting, and then the market just shoots. It has to be engulfing, it has to be at the correct time, because otherwise you don't have volatility that you expect for the candle to do what it should be doing. No, it has to be three candles. No, it has to be three candles. So that's the idea, right? In the case, if you want to wait for this area to be filled by an order, feel free. if directly, yeah, in here, I don't wait for the FPG to be tapped. By this time, a little wick, like there is an FPG here, right? And then there's this wick here that could have triggered the trade in on the limit order. I don't wait for the shit. I see the market, the second candle reaching half and creating an FPG. I enter. Does this give me a better confirmation? No. The better confirmation is really waiting for the third candle to actually enter the FPG, give you the confirmation that you need below the 50%, and then go up. And then you will see that shit confirmed. That is how we should be doing it. This is the same example here, pretty much the same example. So we got the lower of Asia being taken here. This is from 1 a.m. and this is 3 a.m. And you see between 1 a.m. and 3 a.m., you got the lower being taken. And where is the price going? Up. Now you got two methods of entering. You can enter like completely blindfolded with no consideration of how to enter like this. And you have a 1 to 12, and I did it before, and it's pretty decent. Scope of reward that you want. Like, okay, 5R, I'm okay with 5R. Or you can be really precise, like a sniper, by using the methods that I showed you. There is a catch on that. The entries sometimes will fail on you, which is not 100%. Nothing is 100% obviously uh, correct. So this is what, look at this. This is massive. Boom. Yeah. Yes. Yeah. There. Yes. Of course. In here we reached for example, on the Euro Japanese yen, uh, British pound on the GBP, US dollar. We see that the market there's a good chance that the market is going to actually revert from this FVG here, which is this one here, and take the top. You see, massive on 1 hour spikes. So it's the same pattern that we've seen on the lower time frame. And this is why the market is priced. So this is the British pound. So now you would be waiting for the market to enter on this FVG and do the same, right? This is an internal entry with the market order, right? That we saw. So in here would be the actual tapping into this area for it to go up. Low candle like this, and this would be the case like this. And you will still be waiting. This is the difference, right? But the 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 way that the candle, the way that the market then moves is it's much different. I mean, it's important to be at a specific point in time when this happens. If you enter here, you're already entering in half of the actual position, because the great part of the position would be pretty much when it reaches, in this case, 5.5. When we entered here, completely fucking, scrutinize this shit. It's kind of the situation. So the same here, very clean here. Look at that. Yeah, very clean. The same shit here. You see I don't know if you see the FPG here, like this, like that. 2 pips. That's a 15 hour. Exactly. Look at that. It is, man. This is really beautiful shit. And it's there. I mean, what can you what to say? Nothing, man. Look, this. Okay, you can okay. Let's put it safer. Let's put it here on top. Okay, okay. It's a 12 hour. It's yeah, man. Like, dude, come on, man. Crazy, man. Crazy, crazy shit. And there you go. We would be on a 9 hour here. I don't know if you know anything else that can actually do better than this. Let me know because I'll be very interested in understanding. I really would. But at the time, I don't. And from experience, I don't see anything that does the same in the same brutal way that the shit delivers. The way that the shit delivers, the way that you see the price, the way that everything is so fucking defined. Fuck. I don't have an FPG. Will I enter? No. When the fuck would I enter with a crazy? Do we have the Asian low taken? No. Why I enter? No. Why the fuck would I enter? I don't have the Asian low taken. Do I have the Asian high taken? Yes. Okay, fuck. Let's see if there's a formation of an FPG with a displacement candle. There's an FPG. Oh, bang, limit order the fucker, stop the fucking candle and wait for the retracement. This between 1 fucking a.m. New York time to 3 a.m. New York time. Look at this shit. What is the price? Man, it's clear, man. It's fucking clear. I mean, let's see now GBP. What is it doing? It could be also, look at this. It could be, uh, we entered here, we came here, we did this, we came here, we did this. It could be that continues like this. You see? Let's see Euro US dollar. Look at this. Another great example today. Are you seeing this, man? It's ridiculous, man. Look at this fucking FPG right here on top, man. It's completely ridiculous, man. Look, like this, like this. Yeah, yeah. What do you mean? It took the Asian range here. This is model B, this is model A, and you enter on model A. Like it's in the instructions. It's on the instructions. Huh? No, the fair value gap would be here. This fair value gap is wrong. Don't consider this shit. Yeah. No, this is from the previous yeah range that we plotted. Look at that fucking entry. Ridiculous. I don't know where the market is going on. The fuck off, man. Don't trade. Fuck off. You don't shit about this. You see what I mean? How many fucking entries that I 1 to 10 entries that I could have for fucking today? Man. It's crazy. Fucking crazy. I just need to be in a given time of the day, which is from 1 a.m. New York time to 3 a.m. New York time, know exactly what was broken above or below the Asian ranges, because this is going to provide me a reversal fucking momentum when London is trying to open. When London is trying to open, we have in this example, this is the definition of the entry model. You know, we have the entry model. The entry model is simple. This is the Asian range. The top of the Asian range was taken. When it was taken, there was a displacement that created a fucking market structure shift on a lower time frame. And with that, there was an FEG created. This is our entry point. How can you be more precise than this shit? I mean, you're here. Imagine that the price is here, but you already know that, okay, the price is coming back down here for me to enter. And it delivers to you. It gives it to you time and time and time again. And time and time and time again. It's fucking unbelievable, man. Really. It's ridiculous. Really, look. Look at another example here. Look at what happened here. The perfect entry would be here. Oh, this is so 1 to 13, man. Look at that. Now let me know. What do you think realistically, live with this strategy? We just did it. I don't know, man. This is why, in a day, if you don't, you know, do some fucking heavy hours, man, I don't know what you're doing, man. You're playing with price or some shit because this is crazy. This is why I want to teach. This is why I teach this shit. Because if you want to trade, trade properly, man. You know, it is. And like a kid could learn this shit, man. This one fucks us in the ass. Okay, we lost 1 hour here. Then in the end, we're going to map what actually we want and not with this strategy. This one shot us in the face too. Look at that. Bang, massive. This is what I hate about man forex. This always happens in I never seen such an unclassy shit like this happening in futures, man. It's so and now the price comes down. I'm not this crazy. But wait, there were cat news, I think. Maybe that's the reason. Yeah, I think so. I think so. So in here, we're still waiting for our 12 hour to continue. 12 fucking hour here. We already have a 13 hour, and it continues delivering new goods. It's a 17 hour on this one. If you continue, of course. If you're greedy, have fun. I want that 20 hour. What the fuck? And I'm having a smoke, man. So man. Let's map what we currently did then. So you pick up an Excel sheet, right? What we have. Normally the Excel sheet that we use that is linked to the scanner. And this was yesterday. I just did 135,000 in 4 trades yesterday. It was very nice. This risk management is insane today. We didn't use the same logic. We used a different thing. So for that, we're going to delete this stuff. We're going to give it a new file of this shit like this. So 1, 2, 3. And we just map this shit here like this. And boom. Now, let's start from the beginning. What do we have? We have an entry on CAD um, JPY. So in here, what we do is we just map CAD JPY. This was a loss. We lost 1 hour. minus 1000, information 0, model. So in here we use group and okay, Mike, session London, scanner alert. No, hit. No, it didn't hit break even. We could have done a break even actually, but we didn't. Actually, man, I mean, if we were to enter on here, like we would be doing, I think initially, right? Because we would be waiting for this shit to, and then on here, we would just be waiting for it to hit. We could have break even here, right? So analysis time. What to learn from this shit? If we were to enter right after the actual liquidity sweep, and we would enter on the actual FVG there, this FVG here, see this guy here, um, we would be in a really good place, I think. So if we would put it here, the stop loss would be on like where we put it on top of the candle that created the FVG, right? And that would be a 15R. We would be on a situation where we could have done, let's map this with a fucking tool from hell right here. So if we waited until this to break even at 1 hour normally, break even at 1 hour. Fuck, we could have done like, okay, let's break even at 2R. If we would to break even at 2R, it would be a break even, if we would follow the process exactly. But this is an example pair that we just pick it randomly and look at. It spiked and I put the fucking finger. But if we were to follow the procedure here, we would also have a win or a break even. If we just scope a 1 to 3, we would have a 1 to 3 done. Right here, with this entry model, right? So should we put a win or a loss here? You choose. I would normally do this, so this would be a win. This would be a win, and we would take at least 3R. We could have reached 6R, but then it starts coming back to you. So when it came back, I would exit at 3R, just to be safe. In here, we would do 3,000. So we would break at break even, yes. FEG is present, yes. And now, how would we do this? We map the actual position, and we would actually map pretty much this, and we come here to the picture, copy the link, and the link, just put it there. In here, if we need to know how this trade was performing, we have it here, right? We can also signal the entry point, which is there. Remove this shit there. I have it on hotkey. This is why I asked you. First thing is, do you have this tool that you're seeing here? I remember when I asked you if you had the tool. They just said, yeah, I have the tool. This, remember this here? This? No, I don't have hotkeys. No, I don't. Yeah, yeah. I use templates. Yeah, you you create the the box. This is a normal box, and then you add the text that you want to the box. Then I right click and I have all the templates that I normally use the box for to map liquidity voids, to map end dogs, new day opening gaps, new week opening gaps, order blocks, uh, fair value gaps on all time frames, and consolidation, break even, breaker blocks, or all this shit. So when I just scope a fair value gap like this, and I just use a template on the time frame that I'm in, allows me to then iterate very fast. And this, if you're not fast, you need to improve the way that you're doing your things so it can be proficient. And to achieve proficient speed, you need to have the things that you're going to use very close at hand. And this is why, you know. So in here, what I'm mapping is the entry point. So this is the actual FVG here, right? So the entry would be here on this candle here. The FVG is this guy here until that candle there. So that will be the FVG. This FVG is on a 3-minute chart. Then the candle went above. We put our stop loss on the candle that created the FVG. And we're not tapped out, even though that it took the FVG out. Important to break even at 2. So I would put a break even at 2. And this you can do easily with magic key, you know, and you just take profits. In this case, you could have 5R, but then it starts coming back with a market structure that indicated that it's going to go back upwards on us. So we just, with the break even, we just took profits at 3R. And we'll leave it here. This one, we'll leave it here. For this, we take a print screen of this image and document what we done. Documented, done. The date today is the 15th of the 4th, 2025. 03 New York time. Yeah. So from here, we have, just by this doing this tiny entrance, we have a lot of information here. We have a win in London, one trade done, 100% win, a lot of results. We have R achieved. And we have in this case, we don't have the commissions, but we can put like, I don't know, $55 for the commissions. And this will calculate the commissions with, with the price, but the commissions need to be negative. So minus 55, and it will deduct the 55 as commissions to the net value of the position, and the net value is 2,945, right? So let's go for this trade is done. So I would clear it from here, the chart, remove the drawings, and move to the next. So what did we have here? Pretty much the same. So we have a massive entry, an amazing entry right here. This is Euro Swiss franc, so Euro CHF, Euro CHF. We have a win, and I don't know how much R this is, but the same logic applies here. After seeing this spike, I would not be in trade. I would exit around this level here. And you too, for sure. Like, no, this is going to reverse on me. And guess what? It really did. So, of course, after seeing this spike being formed, this would be the actual realistic exit level for me. I don't know how much this will give or the R return or nothing. I really don't know. But let's see. Fuck. It's crazy, man. It's crazy. So, let's bottleneck it with um, this solution. Actually, it's important to understand that it would be really important for us to break even at least at 2R, you know? So let's put it like that, and let's, yeah, exactly. So, okay, let's say that we did a 2R here, right? Let's put it a bit bigger, otherwise we get blind. Okay, so the price entered exactly on a tight stop loss. Look at that. in our amazing entry pattern. That was completely amazing. Look at that. Fuck, man. Crazy. Okay. At 2R, which was here, let me see. This is how I would do it. So we do it the same thing for all the existing trades that we did. I would break even at 2R. The market would come down to 7R. This is 7R here. You see? 6, 7, 8, 9. The market would come to 7R and then starts retracing. And at here, at 5R, I would exit. I would see this consolidation. I'm done. I'm done. I would not let it to come. I would block the fucking price. So in here, let's put, I mean, fuck, 4.5 hour. It's it's fair. Close. Let's take a screenshot of this shit. Yeah, no, it doesn't. You could leave it running and trust your trade, and what you will win it would be 12R. For me, it's like leave it running. If it hits, it's 1 hour. Fuck 1 hour. Who the fuck cares about 1 hour when you can take 12 hours in a trade? So sometimes if you leave it running, the price in this case will come to this FEG and refactors it and then comes down. And this is exactly what it did. The price just came down to rectify this price and then it came down. It doesn't even touch, you didn't even reach your, if you're in break even, you didn't even reach the break even, you know. You're right. I'm sorry. You're completely fucking right. I'm sorry. I'm stupid. I'm stupid. So I would break even at 2R, meaning that the break even would be here. The trade is still going. The trade is still going. So the entry will be here. Price will come here. We will enter here. The price comes here. It's in break even. And it comes back here. It doesn't hit break even and it continues fucking down. You're right. The closure will be here. Because it doesn't hit break even. We will break even at 2R. But I thought, shit, if it comes back to 2R, no. This is the trigger of the break even. The stop loss is moved to break even here. It's not triggered. Look, the price doesn't trigger, and probably we'll need to assess the previous trade because I did probably a better judgment with this shit too because it's too early for that. I don't know. But look, this is correct. If I can you confirm from your point of view too? Price comes here, we enter here. This is where we enter, and then we can actually implement a bit more interesting way, of actually mapping this out. So you have a reference, So, for example, entry, So that was my entry. And why was that entry? Because then when you journal and you look back at your journal, you will notice that shit, this was my entry. Look at my entry. It was on the FEG after the fucking Asian high was taken, man. Right? Yeah. Yeah. I always use it for 10 years. It's something that's stuck with me still. And if something happens with TradeZella, I still have accountability for my trade. Yeah, yeah, because then, yeah, no, this is really good to use TradeZella. Don't get me wrong, I love it. That's what's amazing. So this is the entry, but it doesn't give. Then you can put the chart in TradeZella like this on the journaling. So in here, how much did we do? We entered here, it reached here, backtracked in break even, and we're like, oh my god, it's gonna hit our break even. No, it didn't. It continued down. And I would exit around here, as I told you, because of this fucking spike in here. I would exit. So it's an 11R. What measuring tool? This is a standard deviation tool. It's a Fibonacci retracement that then you can use, and I have different templates for it too. Look, I have a 10R ratio, and if it really needs to go big, I have a 20R ratio. Like this, I can go to 20R because this trade would give 20R. Yeah, yeah. So I can use a 10R like this, you see, 10R. Or if I need something a bit bigger, because my trade is in 10 like this case, gives me a 20R. And 20R is already to my limit, I think. I'm done for the fucking week. Not the day, the week. Like, fuck this shit, right? So, I think it's enough, right? So we did 11,000 on this trade. You see why, right? Look, 9, we can map 11, we can map the 12, the replacements of the fib instead of these values. I can map them 13 and then just map them, and you see that the exit price is on the 11 market right here. Because why? We waited for the price to come here, which was 15R. And we at 15R, we decided, well, the price looks like a massive wick. And this is on the 3-minute chart. There's a massive wick. The price is going to seems to be retracting. And the time from we seeing this wick to the closure, which is here, it's the difference between 15R to 11R. So it's still with the gap of the human intuition that the time that you will take close the trade from seeing the wick to closing it, it's 11R. You lose 4R. And it's decent, I think, to assume that. Do you understand what I mean? Yeah? So minus 135 here. This is BA, my New York Times. This is always the same shit. We have a print screen of what currently happened. We do. Okay. So this is the time that you take from interpreting that this is going to fuck you up from the 15th moment that you see the 15R till the moment that you close. You have this gap. You see? You see? You see in real time, when you're trading live, when you have 15 fucking thousand on the table, you want to see the price. What happens is that the price is creating a spike. From the moment that you're seeing the spike being created, the value of your position moves from 15R to 12 and a half. And then you have from 12 and a half to here to close the trade. So I think it's reasonable to think that taking 11R out of our 15R trade, it's decent, right? It's humanly doable. I think if I would see the fucking spike, I would actually directly kill it. But might take a bit more. And sometimes we're looking at another pair, and when we look, we're at here, right? So this is why I would close it at 11R. Here on the 5R. Yeah. This is 9.5R. Exactly. But it continue lower, continue lower, continue lower. Yes. Yeah. And tell me, yeah. But if you look at the market structure, just to understand why the price came here, you will understand if it's a reversal or not. Look at this. If you just put the graph a bit to the left, look, let me see if you did a good job. Yeah, I'm looking at what's up, but I don't see anything. Exactly. You nailed it. Very good, Ruth. Very fucking good. Yes. That's it. Come on, man. Come on, man. You see this shit hitting this and bouncing just a bit above. You exit. Fuck this shit. How the fuck would you be there, man? Crazy, man. Crazy, right? So this is very, very good, man. This is exactly what is intended, and the most important thing is understanding really these things. Market structure and price action based on the movement of price and liquidity and FEGs. If you know that, fucking hell, you have a massive edge already against everyone that is using RSIs and stochaholics and stochastics and stochaholics and shit. They're all stochaholics. Did you notice that shit? I use stochaholic, stochastic. What you use is this fucking stochaholic. Crazy motherfucker. All right, so this trade is kind of completed too. I think we done for this trade, and we clean the charts and we move to the next. So the next one is euro US dollar. Let's see what we came up with from euro US dollar. We reached brutal level 2. Let's see why the price went there. Let's put it on the 5 minutes so we can really see the FVG here in the bottom. And look at that. Right on the fucking below the 50%. And if it's below 50%, what does the price do? Reverses. If it breaks through, continues. If it reaches like this below the 50% and you see a wick, close. Close the price. So we'll close it at around here. Yeah, yeah. Yeah, yeah. This is true. This is true. If it breaks below, just lock it up below yes. The fair value gap is actually a price that, because of volatility, it went up very fast. Like here, it was very fast move. Because of the very fast move of the volatility of the market, the the market didn't have the price in the order book in the dump, the 3 level order. You will see the price all fucked up, completely fucked up. It's completely fucked. It's not correct. And then you will see no, very fast the market doesn't give the brokers the time to reprice the fucking at a correct price. It's like you're painting a wall and you're putting the ink on the roll, you know, and you're doing it very fast. And because of being very fast, it doesn't stick very well, and there's a lot of holes in that fucking piece of right. So you need to come down with the roll and rectify the areas that have the holes. It's exactly the same fucking analogy. It's exactly the same. The price comes back to reprice the missing fucking price that is fucked because of the spike of volatility. And this is not assumption. You open level 3 down and you see this shit. And you're like, what? That's amazing because now I can correlate why the price goes there specifically in a factual, objective, not subjective way. And this is the most important information that you will have too, because you will fucking know that the price will fucking hit it. Now, how does it hit? If it goes up again, below 50%. If it continues down, it takes the fucking whole FEG down and reprices it. And because of that, it gives us a massive power when we're scouting, right? Because we are able to discern shit from Fanola. And when shit, I mean, stockaholic people with stockaholics and shit like that. Bollinger Bands with the stockaholic and that was great. It was linked with the CCI and I took the COT. And I'm like, oh, this fucked me. Man, shoot yourself, your shit. And, right? Like, what the fuck is that? Those crazy people, man. I swear, man. I never seen anything like this. I have fuck versions of the shit. Fuck you with your diversion. Look at the price. What's that? Oh, fuck off. So there's the entry, there's the FVG. I think everything is kind of mapped properly. The FVG, you see it better on the F3, on the F1, M1. right? Like this. Look at that. Fucking hell. It's amazing. Fuck. And this is the part that you need to really go into putting a bit of time for it to be so you can really map the FEG properly at the correct time frame, because sometimes you don't see the FEG on M3. And where the fuck is the FEG here? You see the price scalping, but you don't see it. But then when you see two candles like this, there's an FEG there. There's an FEG here. There's another fucking FEG here. So if you drop the value of it, the range of the chart, you see the FEG. And when you see the FEG, there's your entry point, man. Yeah, you you can put, but recommendedly, dude, it's still a 10 hour, man. What the fuck are you doing, right? Like what? You want to put, yeah, you want to take the whole thing, you're going to go with greed, and the price is going to fuck in your face. But you can put it like this, and it's a 14 hour. Yeah. Look, this is such a small, this is 4 pips. If you put like this is 3 pips. What it means that if you put a limit order from here to here, the amount of volume of lots that you're going to fucking use is insane, man. It's going to be like 70 or 80. Have you thought about that? Because I had that problem. I thought, man, I'm going to shrink it. But then I thought the amount of lots that I was actually, and then I thought, shit, but like this, I can even open the trade because the broker doesn't let me. The amount of volume that I want doesn't allow me. So because of that, even if it doesn't allow you, put it a bit higher. Scope the same trade. I mean, sometimes it doesn't go. Brokers suck. It's like a fact. It's a fact. And yeah, man. So with this, we would do an 11 hour like this, and yeah, that's kind of the reasoning behind this whole uh, thing. This will be the entry point here, and we would break even again at 2 hour. I think. Let's see where the fuck is the 2 hour. I think if we would break even at 2 hour here, we would be beaten. Look, because in here we reached 5 hour, 5.5, and then it came back to us after break even was hit, and oh no, 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 sorry, I'm again doing stupid shit. We would enter here, so this is wrong. We would enter at this point in time. This is where we would enter, and the break even would be, yes, of course. Can't you see? Fuck. Yes. What do you mean if I'm sure? Of course I'm sure. Of course I'm fucking sure. This is the breakout of the Asian high. You have the Asian high here written. Then it creates the displacement candles at 1:30. At 2:12, 30 minutes afterwards, the price comes back to where it created the displacement, and it shoots down. We would enter here, break even here, nothing is touched, and we would do well. We would wait until it will hit this area, but it will be the 11th, I think, 11.38, and it will be the next trade, the third trade. So Euro USD, it's a win, completely insane. 11.38. That's good. Another 11,380 bucks now. Let's put minus 250 on costs and lots. Yeah. And then what we will do is take a print script of what we did. And the third trade is done. And at this point in time, we have done 24,940 bucks, which is 25R using only 1% risk in 3 trades. Yes, it's Jesus, right? Fuck, come with religion too. Now it's Jesus. No, it's not Jesus, man. If I put it like this, if you see it like this, you don't see shit. And if I take the Asian ranges, like if I take the fucking Asian ranges here like this, do you see anything? Why would you enter here? Almost you don't see it almost. You would probably not pick up the trade. But like this, you would. So this is very simple, man. You map the price from 8 o'clock in the night until it's an indicator that Joaquin gave it to me, and it's session market. It's a paid indicator, but yeah, but it's. I was invited to use this actually. You see, it's an invite only. It's an invite only indicator. And who gave me this? Maybe you know this guy from Abu Dhabi. Well, he's a great trader, and yeah, and he doesn't do exactly the same. He does more or less the same. But at the time, I was looking for an indicator that would plot me automatically these things because I was doing it manually. I was literally doing like this, 8 o'clock, 1 a.m., and then no man, no man. But it saves time because I route through all the charts to see directly in the morning, and there's 30 of them here, and it just saves me a lot of time, because it's not free. Fuck, it's simple. You pay for the air that you breathe, and you ask me why do you pay it? Fuck, crazy. Fuck. Yeah, yeah. So that's the kind of scenario for US dollar. I think we also have the chart here of what we did. So we just confirm. We confirm. We have the chart, beautiful chart there. Massive fucking trade. All right, let's see the next one. Maybe we lose on one. Fuck, that would be good. No, fuck, we also win on this one. Look at this beast of a trade. Look at this shit. So, and then people ask, like, oh, can you do it like this? I don't know. It's just, I see the trade. You just enter and I just do it. Like, how can you not pick this like directly? Well, it's crazy, man. Look at this fucking trade, man. Fuck. I don't know what to say. I think anything about this trade anymore. So in here, I would, the FEG is there, right? So we would enter the trade right here at this point in time. And I think when we would reach the top of the market, which is here, which is the top of Asia, we would exit like this. You see? So this would be the trade. And, that would be the kind of the factual amazingness thing ever. It is? What is it difficult to see? Don't worry, I'll upload this video soon to YouTube. You can see it 50 times and it's in 4K. You don't have any problems with bars. Now the quality of the streaming is shit because of mainly uh, the video I'm transmitting at the same time as I record with Discord. But if I show you here, we're on the video for 2 hours. We did all of this in 2 hours, 2 hours and 12 minutes. So it's more than enough. So in here, I mean, I don't think I need to say anything. I think you already know the right. 13.35 hour. That's 13,350 bucks. Let's put 350 hour commissions. So I'm not saving on commissions, as you see. I'm not. Yeah. So in here, what we trade? I don't even know. Euro, Japanese yen, Euro JPY was a win, which brings us to create an understanding that we reached 37,940. bucks. 38 hour on 4 trades with 1 risk percent. We can lose one. Huh? It's okay if we lose one or two because, you know, it's really fucking okay. Yeah, it's okay. This is why uh, it's really okay if you lose. Okay, don't stress. No, really. No, you're doing the wrong thing if you're stressing with this shit. You should. Yes, it's a manual. It's 5R. Fuck five. What the fuck is 5R? Yes, look at this. This is the trade that was the massive. Look at the fucking trade that we did, man. We did an amazing job on this one. This was beautiful. So this was GBP, the first trade of GBP US dollar. I'll consider the first one. It was a win. We did the first trade right on the spot here, and we traded until, and let's put it back until 3R. I closed it at 3R, right? When it started coming back here, I closed it because it broke this high and shit, and I was like, fuck, it's gonna go back up. The market is reversing. There was an indicator in market structure that the internal market structure on M1 that the market is going back up. And so we closed the position that we entered. We entered with the scope of we're going to hit Asian low from Asian high topping. So the Asian high was taken. We entered on the FET on M3, like here, like we can see. A massive entry. Look at this fucking entry. Sick. Bang! We entered this shit. It started routing directly to 5.5R. We were at massive climax, and then it starts coming back down, coming back to 5R. And then we say, let's put it mildly. Let's say that we exited at 3R, which is bullshit because we could have exited like at 5R. But hey, for the purpose, we just did 3,000 on this one. Yeah. We also had a massive cost on loss, 150 bucks. 150 bucks. We did. We did take a print screen, and this is the first trade of GBP US dollar. Then the second trade, GBP US dollar, is when we noticed then the price was actually going up from our FVG right here, man. Look at that motherfucker. You remember us plotting this shit? It was crazy. So then, yeah. What? Look, it's here. Look at the stop loss. It's not hit. Look, are you seeing this, man? Crazy. It's not hit. So we entered on the FEG. We entered on the FEG right here. We were waiting for this to happen already because we look at the graphs. I mean, clearly state that. And then we mapped the top of the Asian range, which gives us 4.79 R. That was good. No? So 4,790 bucks. Let's put, I don't know, 250 bucks on cost and loss. Because it's really a lot actually. Like massive. Massive. Does that make sense? We could argue that we saw the market reversal and market structure, we took it and we profit from it. And now we go for the last, and until now we did not have a loss and we took 6 trades. We took 6 trades. We currently have 45,330 done. And let's go for the last, which is our one and only US dollar JPY, the one and only beast of the whole fucking crematorium shit. So US dollar JPY was another win. How do we do this now? Tell me. We could say, okay, we would have waited for the price to reach this area here, maybe. You know, there's an FEG that we would see that the price would hit, and only then we would exit. And I would be doing that actually. And here, as you see, we passed from having, and this is something new that I'm going to teach that you still didn't study on the course because you didn't reach there yet. But I study market maker models, market maker buy model, and then you have a market maker sell model. So what we entered in is a market maker's buy model, the first. And in here, with the confirmation that we had from the previous examples, you know that this is a market maker sell model. And the market is going to reverse and start selling from here on, targeting the lower low. But this is more advanced later down the road when you perceive that point. So in here, if we exit here, it's 10 on. Let's put it here simply. 10.33. So that's 10,330. Let's put 350 fucking costs on the lots. Really, that's fucking enough. Which shouldn't be the case, should be actually not the case. But yeah, we can, you know, there. And from here, it's another trade. But I'm not even going there. I'm being very simplistic. So with this, we have a total of 7 trades. We have 55,310 masked on these examples. So that's the yeah, I think pretty much can put it like this. You can see the amazing shit that we did and looking at it like with feeling. 100% win, 100% win. 7 trades, 55 fucking hour return, 2 fucking hours. Actually, 2 hours and 19 minutes, including journaling. Right? Because including coffee, journaling, smoking, and right. So welcome to algorithmic, man. 15 years doing this shit. I had to find something that made sense and the patterns that the market does. As you see, uh, in this case, it didn't take the Asian high, but it gave you a pattern that there's a good possibility that the market is going to reverse from here. When the market takes the Asian high, you have a different percentage of confirmation. And with that, the probability ramps from 60 to 85% that the market is going to reverse targeting below. The same here. When this happens, there's an 80% probability that this is going to be reached. And right now, I tell you right now that the market, if you were to open this like this, and you would still be waiting it for it to reach here, there's a good probability that now the market is going to do exactly that. And it just came down here, repriced these FPG, and now goes back up. You see? FPG repricing here on M15 because it's a higher low. Could it be higher high? Yes. So if you put it on the 4 hour, maybe we will see that better. Yeah, it seems a bit choppy and bearish, you see. I wouldn't go with that. But yeah, there's a good probability that these FPGs here are going to be tapped in, and then the price come down, needs to come down. This is 4 hours, right? So it comes here and then comes down. And for that to happen, this price right now, yes, exactly. But if that's the case, this price that we see now needs to go up. So if it needs to go up, we would still be in our fucking position. Put it like this, what is the position here, right? And this would mean that we would break even at 2, and here it would be already break even, right? So this would be the break even point. Uh, and what would happen? Nothing. The price didn't reach the fucking entry point. It would still be floating with floating margin, floating equity, right? So now we would wait for the price to completely tap into this motherfucker. But the probability of that happening, man, there's quite a good probability because the price needs to come really here. Yes, yes, exactly. No, man, this is ridiculous. Yep. But if you do a fire and forget method, yeah, it's good. But there's a good important part of actually doing trade management because you can feel it at specific points based on market structure that you see that it's going to come down on you. And like this, that's kind of the scenario. That's it, right? I mean, that's exactly it. There's no idea to do that about that. Right? So that's the scenario, man. And that's the wrapping now. The other pairs that I didn't map, let's see their status, right? So, for example, Australian dollar, let's see if I don't have to check active. Right. All right. So let me put it on the 5 minutes. So this is the pair that we didn't use. We didn't use this pair because there was no market structure that was broken, right? So because of that, the entry that was generated was not optimal. I mean, you could still pop in an entry here, right here, because it's within the FEG, you see, and still take quite some interesting profits. But you will need to understand that this is not optimal, not, you know. Exactly, exactly. This is our Australian dollar Swiss franc on the 5 minutes. We don't see much happening actually, but we took it too. Let's see Australian dollar. Oh no, we didn't took it. Euro US dollar. We didn't took this one. Let me see. Push because of this. Exactly. Like that. Let me see here. Yeah, I took the top here, but there was no FPG created. No, we did not have an entry point. We do not talk Australian dollar Swiss franc. We do not have an entry here for this. So this is another reason why you should validate it or, like this. CAD JPY. Did we catch it? We did. We entered on CAD JPY. CAD Swiss franc. Did we enter CAD Swiss franc? No. Why didn't we? Because it's here, there was a market structure that was broken. Maybe we could have entered it. Let's see. A bit more carefully. Yeah, because at the time that I mapped all the pairs and I swept all these pairs to find which one actually took the top liquidity or not, this was not at the time valid. It was not done yet. So we could have entered, I mean, here for sure, and we could have taken. It's on the course. It's between 3 a.m. and normally 1:30, which is here. But I would go 1 a.m. to 3 a.m. You need to see the top of Asian range broke. You should have something like, but you don't need to write it. You have it in the course. Fuck, it's there, man. Let me show you. Yeah, this is important, man, because then, oh, but you teach these things, but then you don't write on them. No, I do. I have massive diagrams. It's not about believing me, it's actually see it and do the course, because this is all there. you know, this is why. But I'll show you really where this is. We will see this later down in the London session here. And in here, I'll show you. Video. So, do you see this? Now tell me, does this make sense with what we just did? Does the course corresponds to what we just did? This is exactly what I teach. There's nothing to change here. This is exactly fucking it. Look at it. It's sick. what we did. We wait for the fucking agent range to be taken. If the price goes to a higher time frame POI, we didn't sell this part, but it goes to a higher time frame POI. And then it comes down. When it comes down, creates an FPG, our entry point, and we enter, targeting the low. We did it six or seven times in a row. And
I'll be looking at the Asian range. First of all, I want to say the Asian range being a range and not trending. So it has to consolidate. It should consolidate because it's part of accumulation.
So you didn't
We should have it as a range. We don't want to see it trending. So we want to anticipate a fake out of a range afterwards. So it's only important to trade or
because this shows you the hours of it. So this comes after advanced common mistakes and agent types. This is going to show you the range, the Asian range, and how to understand that the Asian is actually creating a continuation, which you're not interested in trading, or a reversal. And we just did 7 reversals in a sequence, but they were all wins. We mapped them all. And when I see people saying that you cannot map reversals probability, oh really? I had a 100 fucking probability fucking and 70% on 156 fucking trades in a week doing the fucking reversal pattern. So if you don't know how to do it, that's not the same as other people can't do it. You know, that's a different fucking shit. No, fuck what other people say, man. Fuck them. Look at what you have here. You have everything that you need here, man. Do it, man. That's practice, 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 practice. Oh, now you get the day to relax. But the morning is to work a bit, and now you relax. It's 10:30, man. Dude, it's 10:30. You did 50% of your fucking look. We did 56% of our fucking equity, man. If you have 10,000, you just did 5,000. You know, if you have 25,000, it's like crazy. It's 10,000 in profit. The risk, yeah, yeah. It is crazy. It is crazy. Yes. And it's different. It's live, and you get tiny little bits and pieces. So this is why. Yeah. So that's the thing. I don't know. Do you have any questions at the moment? All right. Yeah. Magic keys. So we're in the magic keys here, right? You see this the screen? All right. Let's open a forex pair. I don't know, euro US dollar to be simple. All right. Here's the euro US dollar bullshit. Use my template. Go back to the template bank, and now I put in the magic keys like this, bang, right? And I use my own customized version that I passed you of the magic keys. There it is. So now I open the magic keys. I have the button here. I create the button, and I open the magic keys. I open one screen. There is appearing fucking magic keys. When it appears, what I do is I actually open it, and I want to put the trade here, and I want to target this high, and I want to use 1% risk always, and it gives me a 6R with 1% risk. The R is here. If you want to scope a bearish, which seems to be very interesting to actually achieve, you switch. If you want the pending order on the M1 because you're thinking that the price is going to come to this FPG here, you open a pending order, say, I want it here. It's flawless. It's insane. And it's static DR now with the pending order, 6.2, regardless. Yes, open calc. With everything, you open it, and then you market pending or not, and you input your risk, 1%, and it's very fast to do all this. And in this case, you would change, for example, on this FEG here, as you can see, you could enter here on this FEG with this top here, targeting this low here, probably, and that will be a 1 to 4. And look at that shit. This is exactly, this is really good. It is really fucking sick, man. So this is the idea. Like now we have an FEG, we have a breakup structure in the market. The market came here. I would do something like similar to this, right? The price came to rectify this FEG. We have an FEG here. So how do we enter and use the magic keys? We put it here. This is the actual waiting for the third candle that will create the FEG. Until then, we don't have an FEG. This is very important. We need to wait for the fucking FEG to be created, but I already know that my 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 candle would be probably this one. That will be my fucking entry point, and I will be targeting this shit here, and I'll open it like this. It's that's I just clicked open trade. That's it. I have a pending order here. You see, sell stop. When it passes this level, it opens my trade. It just opened the trade for me. You see this? With the risk, the risk is 2%. I use 2% risk. I should have a 6R, so because I'm using a 1 to 3, so I have a 6,000 return on this one, and we enter with the pending order, like down to the fucking core, right? Now, I did it because I wanted to. Now let's put a break even in the half, so 1.5%. 1.5R is here. Activate it, and I also want partials at the same time as I take the break even, and I want I don't know, for fun, I will just put 80% of partials reset when I reach that point. So 80% of the volume is going to be taken out, and if I have a partial, I have a break even, and that's it. It's crazy, man. Nice. I tried to do this manually. Good luck. Luck with that shit. Yeah. Have fun. Have fun. That's the shit, man, right? I mean, yeah, that's kind of the vibe, man. This kid's gonna hit my stop loss almost at the fucking pip. Look at that, man. Crazy, man. This is the importance of really giving it 2 pips. You see that shit? So now it seems to be creating a bull trend, and from here, I would exit it actually at this point in time. Unless it really breaks this low, yeah. And again, we can continue with market structure on even on MT5. It's really cool if you see it like this. It passed the actual yeah thing, but yeah, but I don't like to see price on the MT5. It's scary, but I just use this to map the trade that I already analyzed here. All of this, yeah, I use all the buttons, man. No, I don't. Yeah, and then if I want to close the trade, I just close the whole fucking trade here. Pow! Didn't you saw? Didn't you saw me using auto break even? But don't worry, it's recorded. You can see the video again. So there you go. Yeah. No, as we saw here on the exercise, we break even at 2R. Yeah. So let me do it again. Trade, right? We got the trade. Let's go for pending. Pending. Fuck it. Let's. Yeah. Okay. The market seems to be going. Which I want to do this. And what I want to do is take this top, and I think the market is going to take that top. I want to risk 1%. We can see the 1% here. Okay. So, okay, maybe the market is good coming down. Down, market pending. No, it's not. This is pending. This is not pending. Pending, 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 not pending, pending. Market order, not pending. Then order, market. So now we got the FVG target there. It's still a 2.5 to it. Now it's a 3R. So I put 1%. I open the trade. Now, how do we know it's a 1R? We put it, or a 2R. We put it on the 2R, open the market, come here, trigger the activate the button, and then we move it back. Then we have the break even at 2R. And that was fast. That's it. You have 6R here. We have 2R entry, and we have it at 1R. 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 This is 1R. So that's kind of it. We can also do the same. Close the shit. Close the thread. Open copy with 1% right on the wick. So it's really tight, motherfucker. And 8R. Open trade. Now we have 1000 and we have 14R. Because it's tight stop loss. It's very similar to what we do. And because it's tight, it can be like, it can really just flush on your face really fast, which is normally what happens. So, I mean, this is why it's important to give it a bit of breeze of space. Do not attempt to move the stop loss after you take it. In this case, leave it there because it's going to kill at your risk. Do not move the stop loss. Let the fucking stop loss be hit and then open another position. Do not move the fucking stop loss everywhere like I see everyone do. Fuck that shit. It's going to kill you, man. Leave the stop loss. Let it hit. If it hit, there's something wrong with your trading idea. Analyze why. Do not do repeated impulsive back in the fucking market impulsive moves. Don't. Take a moment, have a coffee, have a smoke, jerk off, come back to the chart, look at another pair. Maybe this pair is failed on you, but there's another pair that actually gives you the conditions that you're looking for. And this is why, man. This is why. Look, fuck, okay, you didn't give me that pair, but this one, it completely fucking nailed it to you. Look at that. And only now, at 3:48 a.m. New York time, the market was taken. It came down. It delivered you a fucking entry point. It took the Asian top, and now it's coming down. And this is GBP-CHF. We did not trade this because it was not taken at the time. But now it is. Is it the right time to do it? I don't like it because the volatility, man. I like the spike in volatility and to do this maximum to have every trade close at 11 a.m. If I have trades open at 11 a.m., I close it. Yes, close it at 11 because from 11 a.m. until 1 p.m. Our time, uh, there is a thing called the CLS, which is the settlements, and this is going to create macros, and these macros are triggered in the way that the market is going to completely backfire on you. So if the trade is going to be correct, it should be correct at the time of the beginning of the year. But you can still, dude, give it a try. Open the trade exactly as you would open it here, practicing like this, and see what happens. And if it reaches there, understand why is this a 10R and why wasn't I doing this for the last 10 fucking years? Because if I would enter now, you would enter now with this trade, like really tight. You will be already at I mean, you can continue the whole fucking day with this logic, but you would be at 4 hours. And you could have exited at 6 hours already, but it's pulling back and it's slowly continuing and shit. And then how do you know that the market is coming down? This is where you enter mid time frame, you understand market structure, because at M15, you will see exactly what we saw on the lower time frame. Look at this. And this is what's happening in the mid time frame. The market is doing exactly the same, and this is why the prices fragile. You see? Goes up, takes the top, creates an FEG. The FEG is spiked by the market liquidity, and it comes down and breaks the low. In this case, seems like it's a bearish market structure. If it breaks the low, we're expecting it to break this low, meaning that the trade that we currently in can end up in a 32R in an intraday level. No, that's serious, man. Look. And the reason why is the narrative that supports our ideology, which means the narrative is that we're in a market maker seller market, and we entered in a very interesting. Actually, to be honest with you, I would be expecting this stop here to be fucking taken. I would still be waiting for this shit to be taken like this, and then to reach the bottom. And this normally happens in New York distribution. And as you see, this is London. This is what I was telling you in the beginning. This is London. It does the pullback, and New York will do the distribution. It's the same. You're just seeing it in a fractal M15, and the same happens in an H1, M1, H4, the daily. It's all fractal. It's all fractal. If you see, this is daily chart. Look at what we have here. That's the daily. And if you wanted a bit more precision, maybe you can move to the 4 hours. You can really tap into it because it will give you really the fucking FPG to the next level with that. So probably this guy would be but it's actually what we saw on the M1 right now. You can perceive it on all pairs at a higher level. So I hope this makes it sense. Does it make sense to you, or not really? I don't know how to do it better, man. I mean, a kid would trade this shit, man, without understanding anything. He looks at the time, looks at if it takes up or down, he looks at if there's an FEG and the conditions are met, he puts a fucking trade in a limit order, just the stop loss above the fucking candle, and then waits for the reversal, and that taps in, and that's it. Do you need the scanner? Do I need the scanner? No. No, I do. I don't. I don't need the scanner. Do I like to use the scanner? It's cute. It has great statistics. Right? That's it. Look, like right now, you have USD CAD. You come to USD CAD, and you see that there is a bearish on the H4, and there is a bearish movement on the M15, which is this coming down, creating a pullback, and now it should break this low. If that's the case, we would need to see on the M1 a market structure shift. And we will see the market structure shift changing from bullish to bearish, making us understand that the market is continuing in the higher time frames logic. And when you see that on the M1 and MSS in orange, enter man, it's insane fucking brutality. Yesterday, this is what it's doing. Look, that's it. That's exactly what it's doing. It's the same shit all over again. You have a pullback. The pullback, how does the pullback work? Creates an FEG. The FEG is tapped on the previous pullback, and you enter. It's the same shit If you look at what I told you. Look at the fucking FEGs and look at the pullbacks, man. Taps on the pullback, taps on the FEG, taps on the FEG, drops from here. Look at that, man. Yeah, it is. Yeah, sure. It's really there's a lot of coincidence. Yeah, this is all coincidence, Simon. This is not. No, it's coincidence. Fucking retards, man. Yeah, sure. And yeah, so that's the thing, you know. I mean, if you know the market that the market is gonna break this low, and you're in this position that it started uh, to actually reverse down on you. Tell me. Yeah, kind of forget it for now. It's nothing. For what you're trying to do now, you don't need the shit. You don't need the shit. If you're a scalper and you want to do 50 trades a day, this might help you. That's it. That's it. Man. That's it. That's a different story. Yeah. Yes, it is cute. It's more confusing to the table. You know. You want to have confusing, you want to have simpler.